Hello. So today we're going to talk about covered calls and cash secured puts. There seems to be a lot of talk online, people saying, what should I do? Should I do the covered call or the cash secured put? Well, in reality, they're both the same trade. I'm going to use the Analyze tab here to show you that. And we're going to compare the 42 covered call versus cash secured put, the 55 cash secured put and the 55 covered call, and then the 85 cash secured put and the 85 covered call. So let's get started here. We've already got our 100 shares of stock selected. If we click on the 42 call, our strike price, our current price is roughly a 54.37, so nearly 55 a share. And we can see that our max profit is going to be $143, and that's shown right down here. So $143 of max profit as long as the stock stays above about $42. And then once it actually drops below $40, we're actually going to start losing money here. We can actually move these lines over. That'll make it easier to visualize. And now if we look at the cash secured put at the same strike, we can see it's nearly identical. Our break-even point is at the same place, and our max profit is at 150. I think that. So the cash secured put actually has a little bit more max profit, not much. Okay, so now we can compare the 55 covered call. The 55 covered call is going to give us $674 of max profit, and that's going to be as long as the stock stays above, $55 a share. Our break-even point is at 48.13. So as long as the stock stays above 48.13, we're just going to break even on the trade. And let's move these lines now to compare these as well. Okay, so now let's drop in the cash secured put. And now the 55 cash secured put. We're looking at $665 max profit, and our break-even point is at the same place. So here again, they're both identical trades again. So now let's look at the 85 covered call. And the 85 covered call, our max profit is going to be way out here. But we do have $3,171 of maximum profit we could achieve. And then our break-even point is pretty much at the strike price or the current stock price we're at right now. So there's really no room for downside. We need the stock to go up to profit here. And if we look at the cash secured put, it's going to be nearly identical as far as the risk profile goes. Our break-even point's at the same place roughly, and our max profit is also at the same place. 31.40 is our max profit. One thing to note here, if you're going to sell a cash secured put this deep in the money, it's probably going to get assigned. And the same thing goes if you're going to sell the covered call this deep in the money, it's probably going to get assigned. So that is just something to think about there. But anyway, I just wanted to show that basically as long as you're trading at the same strike price, you're going to have a nearly identical trade. There's really not much difference between them. And another thing is if you do both of them, basically you're just doubling your profit, and your break even stays the same. So, this is basically 100 shares, the covered call and the cash secured put, all as one trade right here. And we can see that our break even point and our max profits, our break even point is still right around $40 a share. And if we, that's the cash secured put. Even if we did two cash secured puts, we're at 302 there. So we're basically two cash secured puts is the same as one cash secured put and one covered call. So it's not really much of a difference there. It's the same trade. One time where this will be different, and I'll try to show that now. The reason these trades are the same is because the implied volatility is going to be the same. If we look at the 42, we have 103% implied volatility there. we have 105 there. If we go down to the 55, we're at 102% there. We're at 103% here. And then if we go down to the 85, we're at 126 and 119. That's why they're so close, is because the implied volatility, there really is no edge there between one trader and another. But one stock we can look at that there is an edge is going to be switchback energy. Right here we can see at the money, the 35s, we have 102% implied volatility here on the call side, and we have 144% on the put side. And if we compare those, let's do this. We're going to compare the 35 and the 40 on both. Okay, so this is the 40 covered call on switchback energy. Our break-even point is going to be roughly around $33 a share, and our max profit is above 40 a share, and it's $683 max profit. Now that is the 40 covered call. If we look at the 40 cash secured put, the 40 cash secured put is giving us $830 of max profit, and our break-even point is lowered at roughly $31.79 a share. So there's a little bit more room to the downside there, and that is because the volatility is higher in the put. It's paying us more money to take on that extra risk. And if we look at now, let's do the 35 covered call. So our break-even point on this is going to be roughly $31.80, and our max profit is $333, and that's going to be as long as the stock stays above about $35.60. If we look at the cash secured put now on the 35, we can see that our break-even point is all the way down at $29.92, roughly $30 a share is our break-even point. But our max profit is $5.15. So I think we had more max profit there. Let's see what the covered call was. I forget. Yeah, $336. So not quite $200 more profit, but this basically shows that if you find something that has a volatility skew on either the put or the call side, you're going to make more money with the higher volatility, but there's also more risk there as well. And if we go farther out in time, it's basically the same thing. At the money here, we're 168 and 177. If we go look at the calls, we're at 95 and 104. So we can see that it's going to pay even more. I think this right here, let's just look at it. Okay, this is our April expiration, so we're a little farther out. 100 shares covered call. Our break-even point is roughly $32 a share, and our max profit is going to be $792, and that's at $40 a share. If we look at the same strike, same expiration, cash secured put, our break-even point is lower, all the way down at $28 a share, and our max profit is $11.55. So that's substantially more max profit there. So that is something to look for. It is paying more money, but there is more risk there. Basically, the market looks like they're pricing in a move to the downside. It may or may not happen. So there's just a number of ideas that you could do there. But anyway, hopefully this was helpful. Maybe you learned something. Thank you for watching. Bye.